All right, y'all. I decided to make a video today. I hope you guys enjoy it. I've been scrolling, perusing through X, and I have come to the conclusions that it is time for me to throw my thoughts out on the internet when it comes to the markets. I feel like a lot of the analysis on crypto Twitter and even FinTwit is just very incomplete and just not very good. So let's see if we can change that. All right. So we're looking at Bitcoin here, and I really think it's important for people to start looking at Bitcoin from a different perspective than maybe what they have looked at it at, or how they have looked at it in the past. First, we probably need to zoom out. We're going to kind of go on the more, macro side of things, just bigger picture, and we'll zoom in. I think it's appropriate to start there because if you're not careful, you're going to kind of miss the bigger picture, the bigger trade, which is that I think most assets are going to be going down versus Bitcoin. And you may be denominating in the US dollar a lot of your assets, but you should probably start denominating that in gold or Bitcoin. So let's kind of zoom out. What's going on with Bitcoin, like on a kind of a bigger time frame here from a technical standpoint, and we'll kind of throw in some macro points, I guess, in between time frames here. Okay, so let's just remove a lot of these drawings and just look at this most objective as possible. So if we look at Bitcoin on a higher time frame, Bitcoin most of the time goes sideways. I think it's a misconception from a lot of people that this thing, has these super explosive bull markets, which it has in the past. If you look in the past, it did have very, very kind of just straight up bull markets, but it has changed a lot over the last couple of years. And there's reasons for this, but let's just look at it as objective as possible and say, this thing likes to go sideways most of the time. Okay, so we saw last summer, or most of the year, this thing just went sideways. And it bored people to death. People didn't want to look at it. They definitely didn't want to buy any of it because the S&P 500 was going up a lot of this time, right? And people were really frustrated. We finally had this big move after the Trump victory into the inauguration, and now we're kind of going sideways again. I think what people need to start to understand is this is likely, this whole sort of period from, let's say, 2023 and to now, is likely to be seen in the future as just a loading phase for a much bigger move, I think, that is coming, which is much more similar to gold. I truly believe, and we're going to go into why, that Bitcoin is really just lagging gold at this point. If you look at what Bitcoin is, it is much more similar to gold. And if you look in the past on gold, gold is really the king of going nowhere for long periods of time. It has gone sideways. I mean, this move is incredible that it has seen over the last year or so. But look at this thing, 4 years before then. It just went nowhere for 1,300 days, right? So there's reasons for this, the supply-demand dynamics of gold. Now people realize that the stock market is likely not going to do very well, and they need to diversify, and you don't want to hold treasuries, or at least too much of them. So gold is this obvious place to put your money, and this is ultimately going to be very good for Bitcoin. Okay, so I'm starting with the high kind of time frame here. It's really important, I think, to start there, that Bitcoin is moving in to its real identity, which is a store of value, hard money, potential future reserve asset. Okay, and the geopolitical landscape right now, we won't go too much into that. I want to keep this more sort of, I don't want to go too much into that because I think there's people that do that better than me, but we'll just say that the geopolitical landscape has never been better for Bitcoin. So this fourth turning, restructuring of the world order, whatever you want to call it, okay, that changes fundamentally what money is, or at least the piping, right, of money, and what is considered to be sound money and what is reliable and safe and all that. All of these things that we've just taken for granted over the last, I don't know, since World War II, this geopolitical world order that really allowed the dollar to be preeminent and the obvious reserve currency of the world is breaking down. Now, that doesn't mean that it's all going to go away overnight, but this clearly is going to open up a void. And I think Bitcoin will start to step into that void, which is that, and among other things, but the world is going to go to a model of maybe multi-reserve assets. Who knows? I'm not an expert on this, but it's pretty clear the dollar is going to have issues maintaining its reserve currency status as we go forward, unless there's some sort of big changes that occur that's just totally off the radar right now. Okay, it doesn't mean the dollar is going to go away, but people are not going to want to hold dollars nearly as much as they had in the past. Okay, that's pretty clear. All right, so that's kind of the zoomed out view. So I mentioned that to say, in my opinion, this is not financial advice. You probably want to own some Bitcoin at all times at this point. I think people, especially people like me, who trade for a living, think they can out-trade this market, and but the reality is most people are not going to outperform Bitcoin over the next year, or even next 5, definitely probably not the next 5 years. If they're trying to be cute and outsmart it, thinking they can cut here, short here, and make money, when this thing is really likely to start going into up-only mode. Which, again, because of this geopolitical reshuffling, is really beneficial for something like Bitcoin and gold. Not to mention, as SPX, people sell SPX and they have capital on the sidelines, they don't want to put it in SPX. Where is it going to go? Gold and Bitcoin. And there's other places. I'm not saying they're the only two. But okay, you want to put it in the Asian markets, the Asian stock market, the European stock market. Well, if you think S&P 500 is going to have an issue because of recession, or really the financial markets themselves will put you into a recession if they stay down for too long, I think it's pretty safe to assume that the other big stock markets around the world are going to also have issues. So again, hard money, or how about this, simple assets. Things that do not have a lot of inputs, okay, that control the output, meaning the price. Like with the stock market, you have to worry about supply chains. You got to worry about, again, like tariffs and how all of these dynamics are interconnected and how they change each other. It's super complicated. So you have to be a stock picker, again, an expert at understanding earnings and how these different pieces moving around right now affects stocks. Or you can just buy gold or Bitcoin, which has almost none of those dynamics. It really only cares about liquidity. Okay, so again, I'm not going to spend too much on the high time frame, but I want to get that across that this is the time you want to be owning Bitcoin and holding it, all right, as we go into the next few years. If we zoom in, so let's get some more actionable advice on a little bit more zoomed in time frame, where you can see that Bitcoin's had this big move down from the highs. So right now it is roughly I think 20% from the highs. If I took the peak, it'd be around 20%. That is crazy. The fact that this thing only went down 30% from the peak to the trough. That's nuts, guys. Why is that nuts? That's nuts because we had a VIX spike up to 60. I'm looking for my VIX chart here. We had a VIX spike up to 60, and it stayed there for a while, by the way. If I zoom in, you can see it stayed there for a while, close to it. And all the while, the stock market had a crash. This was a crash. This period right here was one of the worst, weeks or few, 5 days or something like that on record. If you would have told me that this would have happened, I would have said, okay, well, Bitcoin's probably going to 50K under that scenario. And ultimately, this was the biggest risk vector, in my opinion, as we, went into 2025. People that know me in some of my group chats know that I was pretty bearish actually in December and pretty bearish in January. Mainly because I'm not worried about the fundamentals of Bitcoin. I'm worried what it's going to do when correlations go to 1, because the S&P 500 is fucking crashing, or I didn't think the market would crash like that, but I was thinking it could. I do think it's going to go down, and I think the risk reward was terrible. So that was what I was worried about. So the fact that Bitcoin has showed how strong, it showed so much strength during that, I am bullish. I mean, that was the biggest risk factor, in my opinion, for Bitcoin. There are others, to be fair, quantum computing and just things that could change liquidity, like countries actually being fiscally responsible, probably not so bullish for Bitcoin, right? But that was the big obvious one that was sort of in the, in sight that could happen. And we only went to 75K, guys. It's fucking crazy. So this is so bullish, in my opinion, for Bitcoin, in that it handled itself so well when things were so shitty that there is a floor on this thing. There is accumulation occurring. You clearly had very large buyers stepping in here. Okay. So from a more medium time frame, and I say medium in the next few weeks and months, couple months, this is how I'm looking at it. So if we zoom in, I'm going to get out some tools here. We're currently battling the 200-day and 50-day moving average, which is wild in and of itself because the SPX is so far away from these moving averages. So this gray line and this blue line, that's the S&P 500. We look at NASDAQ, quite a bit further away from that as well. And then look at Bitcoin. It is relative. So people are like, relative strength's a meme. No, it's not. It's actually relatively strong. So we're trying to battle these levels out. We'll see if we can. Let's say that we don't, which I'm not saying that, but in the event that we don't, I do believe you will find support closer to 80 to 81. So this is kind of like my line in the sand. I don't want to be below 80 for very long. We should hold that level if we get there, if we're going to maintain this bullish stance that I have. Okay. And, let's say, if we break out here to the upside, I would expect that you're probably going to see another sort of chop solidation or whatever if we get closer to, 88 or something like that, which is fine. I don't think this is just going to blast off to the upside without some sort of FOMO narrative. But I want to show you a chart which could actually create some of that FOMO narrative. And that is Bitcoin versus SPX. Bitcoin versus SPX is the true north for me. I look at this and say, I don't know how you can be bearish Bitcoin when, as SPX is going down, Bitcoin was going up versus SPX. So that is relative strength. Everyone's waiting for decoupling. And it's sort of like the analogy I give is they may not notice it's happening. It may be so slow and subtle, like a frog being boiled slowly, where they don't even know it's happening. Guys, it's happening. You're decoupling. You're in the process of the beginning of this. And people, by the time you have crypto Twitter all convinced this is happening, it's probably going to be trading a lot higher. And maybe you want to take a little bit of short-term profit whenever that becomes the case. I mean, people are talking about it now, but people are still very skeptical. So that's a good sign, I think, in the short term. But you can see this is clearly in this sort of phase that you were in last summer, and it's just gaining ground versus SPX. And if you look at the NASDAQ, or SPX versus the NASDAQ, it's even better, even closer to a breakout. So I think if you get a breakout on these charts, that may create the FOMO where people are like, okay, it's time to deploy a little bit more aggressively. Right now, I think people are comfortable with just buying on these pullbacks. They feel like they don't have to rush in to hit the market buy button. they can just sort of passively bid. That might change when this breaks out. Okay. So this is a short week. This is Thursday. The markets are sort of slow today, so I'm making this video. I'm bullish. It can go sideways. I'm not like, I don't really have a strong opinion on if this is breaking higher in the short term to 88 or not. I don't really care. What I want to do is I want to add more. Hopefully you bought down here under 80. Okay, I'm still holding spot from under 80 that I added. I want to add more if we get a pullback to 82. So let me zoom in here. If we get a pullback to like, which right now it's looking like that may not occur, but if we did get a pullback somewhere, closer to like 82 and a half or something, and under to 80, I would be adding. And I probably would add more if we could reclaim this level, to be honest. But as of right now, I'm kind of sticking to what I got. This is a bullish structure, guys. I say decoupling. It is relatively strong versus SPX, which I think is the beginning of the decoupling. I'm not interested in altcoins. This is all Bitcoin's the only asset that I feel comfortable really owning a lot of, and at sleep at night. I mean, other than gold. So I'm not going to go into the altcoins. But I wanted to keep this video brief. This is the first of many videos I'll be putting out. Let me know what you guys think. Sorry if it's sort of all over the place, kind of choppy. But we got to start somewhere. All right, guys. Hope you have a good weekend. Kill it.